David Hoyt, Mr. GJ. You guys probably already know who I am. Basically, you call me. I don't call myself a master trader, but I call myself a master scalper. All I did was took a few strategies that I learned in the 7-8 months that I became a part of IML, and I just made it into my own system. Like, there's nothing different from different strategies. I took market structure, I took scalping, I took the cloud. I just kind of made something that works for my schedule and works for, best for me. All right. So I'll show you guys, and then, if you're following me, I guarantee you, and most people can't tell you that, but I guarantee you, if you follow every footstep, everything that I'm telling you, I'm teaching you when it comes to growing your account, when it comes to trading, when it comes to you name it with the strategy, I guarantee you, you'll profit. There's facts and proof in the past 5, 6, 7 months. I think my record, sometimes I have to go back and check on it, but the record right now is, I think, 412 wins and 4 losses. Every week I have to look at it. Before I used to look at it every day. But, when you do the percentage in win to loss ratio, I mean, that's pretty strong. If you have a 60 to 40%, win-loss ratio, that's still good. So what I'm going to teach you guys is how to start from there and work your way up. But if you follow me along this journey, like, I'm not going nowhere. I'm going to basically trade and make millions and millions and millions of dollars from this, from my cell phone. And my goal is to help you guys along the way to do it. I feel like that's where my success is coming from in the market, is more or less helping, you guys, because everybody is trying to, be financially free. Or if you're already financially free, get to the next level. So if you have a question, and please don't just come on this call and sit and watch. I know I look good, but don't just come on here to watch me. This is for you to learn. Remember, I already have the strategy down pat. So it's for you to understand how to trade in this market, how to capitalize on this particular strategy. And you may have a strategy you're using already, but the more you learn will be better for you. So anytime we're talking about anything in life, you have to have goals, all right? So my goals in this strategy is simple. It's basically 5 trades a day, minimum of 4 pips with a 20 pip total. So when I say 4 pips, you'll see at the end of my presentation where we worry about being in profit. 4 pips in profit, which is your stop loss being in profit, all right? Which you do 5 trades times 4 pips is 20. Now you may basically get 2 trades from me for 10 pips each, and that knock your daily goal out. But you have to have goals regardless of what it is. Just, I tell everybody this all the time. A goal without plans is just a dream. If you have a goal, if you say, hey, look, I want to be a millionaire, or I want to make $100,000, a month or a year, or whatever the case may be. If you just say that and you don't have no goals no plans to back up your goal, then you're just dreaming. But if you say, look, I want to make $1 million in trading, and you say, okay, I need X amount of pips with this lot size, and this trade is going, sorry. And I lost my train of thought. So I'm basically keeping it real. I'm in the trade as we go, and I just want y'all to see that that's money. That's money just dropping. But I haven't called nothing yet. All right, so a goal without plans is just a dream. You have to have plans, guys. So when we talk about this, plans, everybody should have a trading journal. And guess what? You don't have to go and buy a trading journal from a store. You can use your cell phone as a trading journal. You can go in the notes section of your cell phone, and you can actually keep track of what you're doing. That's simple. If you're brand new to trading, or if you've been trading for a while, just keep track of what you've been doing. Start off, small. Start off with, okay, I'm getting 10 trades this week. And you keep track of those 10 trades. If you say you want to be a swing trader, then you need to, keep track of the long-term trades that you're getting into. If you want to scalp, you have to understand what scalping is. And then you keep track of it. So this is all a part of setting your goals. Setting the plans, setting your goals and having plans behind it. So this is what I use. five trades a day, minimum 4 pips in profit, 20 pip total. My weekly goal is 25 trades with a stop loss and profit, minimum of 4 pips. That's 100 pip total. Now I could call 10 trades that hit 10 pips TP and knock this out. My goal for the month is 100 trades. So when you break these down daily, it doesn't seem much. So if I was to come to you and say, hey, we need to shoot for 100 trades per month, you'll look at me and say, okay, 100 is a lot. But if I come to you and say, hey, I need 5 trades from you per day, it's more attainable. You can call 5 trades that you know that you can hit profit. All right, so that's my goal there. All right, my reason behind scalping is more or less quick money, weekly withdrawals, fast movement in the market, and then I can make money any time of the day. So if you're a swing trader, then basically the swing trader, you have to wait for setups. You know, you have to wait for setups when you're swing trader, and you know, sometimes you may have to wait a few days. But when you're scalping, you know, I'm going in the market looking, you know, for certain things, you know, which I'm going to show you guys. And once I see that, I jump in the market and I trade. I don't have to wait for setups. I just know what I'm looking for. All right. I like fast movement, and that's going to be on the impulse. Making money any time of the day is usually on the consolidation, which will make sense to you guys in a minute. So here's the thing. If you guys want a screenshot, here's my FinPro link. You can actually go and sign up on the FinPro. The reason I use FinPro is because the spreads are low, the commissions are low, they reimburse you on your deposits. So the more money you get to keep in your pocket is the more money is, you know, you basically profit at the end of the day. You know, they just told me last week they upgraded me to a VIP account where basically on a standard lot size, for $1, I was paying about $10 per trade, which is pretty low if you try other brokers. But they told me now I'm going to pay $2. Now, I'm not that good in math, but I know with the amount of trading I'm doing, that's a big difference. That's $8, you know, they're giving me on that. So I love FinPro. They have a representative that works for you, so I'll always promote FinPro because this is what got me into scalping. All right? Their low spreads actually got me into scalping. When I was using Traders Way and JFax, the spreads were high, so I couldn't scalp with those brokers. But when I found about FinPro, it was game on. All right, find one pair and marry it. This is key. You know, they tell you don't try to do too many things at one time. Now, when you scalping, the market is moving so fast that you can't do this in a whole bunch of different pairs. You know, sometimes I see folks, you know, they'll post and send me their trades, and they got about 6, 7 trades going. I stick to 1 or 2 trades at a time. You know, 2 trades, excuse me, if it's clear that I know what's about to happen, I'll jump in a second trade. But 1 trade, I wait for that 1 trade to hit first, and then I go into a second trade. You know, if it's clear that, you know, hey, this is about to happen, but I wait till my TP hit or my stop loss is in profit, till I'm out of a trade before I get in another. The reason I use GJ is because it moves about 100 to 200 pips daily, okay? So if you have that much movement going on in the market, you can make a lot of money off of 100 to 200 pips movement daily, all right? And then by sticking with 1 pair, you learn every move it makes. So here's the thing. You know, I don't get surprised when GJ shoot up or if it drops because I've been watching it for the past 7 months. So I know the movement is making, you know, so you have to find 1 pair. And I'm not telling you use GBP, JPY. You could use any pair that you like and just use the same strategy along with it, all right? Now this is going to be key for you guys. This is where you take out your notes, all right? So the 2 indicators I use, and really, folks, indicators is just for confidence in your trading style. All right, it helps you see the clear picture of what you're looking at. So the two indicators that I use, the Ichimoku Kinko Hayo is just basically a 1-glance equilibrium chart. Okay, and it's basically the cloud. Now I'm going to give you you know, three bullet points to write down. It's going to make sense when we go into the charts. So So Kijun-sen is the blue line. That's KIJUN-SEN, and that's the confirmation line that goes over support and resistance. All right. The Tenkan-sen, which is TENKAN-SEN. That's the red line. Somebody just call that line money, because that's going to tell the whole story of what's going on. Call that the money line. All right. And that's really the signal line. All right. So here's the thing. These two lines is going to tell the story in the cloud. All right. So the red line is the signal line. So the direction of this red line is telling you where the trade is actually going. All right. So number one, if both lines are moving horizontal, that's confirmation of consolidation. Consolidation, you can make a lot of money with consolidation once you find your highs and your lows, and we'll go over that also. But this signal line, the Tenkan-sen, the red line, if it crosses the blue line above, that's an indicator or indication that it's going to be a buy. That's one indicator. So you don't call a trade off of one indicator. You have to have about 3 or 4 and have a checklist. And I'll go over the checklist with you that I use. And you basically say, okay, if 3 out of the 4 is basically, going in one direction, you can make that decision and say, okay, well, I'm strong with I'm confident in this trade call that 3 out of the 4 indicators is going in the sell. So I'm going to go in the sell. If all 4 of them is strong indicators that is going in the sell, then you better jump in the sell. Vice versa if it's a buy. But if the red line crosses above the blue line, that's an indicator that it's a buy. If the red line crosses below the blue line, is an indicator that it's a sell. All right, that's one indicator. All right. So another indicator that I use for consolidation is called the Bollinger Bands. All right. But the cloud, Ikimoku, is where I basically get my signals from. Okay, leverage. Leveraging is key, folks. I'm going to tell you this. Write this down as big as you can. Leverage, 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 leverage. This is where you're going to make money. And this is where you're going to lose money. So I'm going to give you the best advice when it comes to leveraging. You have to learn how basically not to be greedy. You have to understand this. You can have $100,000 in your bank account right now for a full month, and this is facts. And at the end of the month, your bank will probably give you about $3 to $6. Credit unions give a higher percentage, but this is facts. You can have $100,000 in your bank account, and at the end of the month, you get about $3 to $6, okay? With $100,000 in there. So if you're in the market trading, and you're trading, let's say you started off with $200 or $300. If you make $3 on trading a 3-cent lot size, you don't think that's valuable to be excited about? Versus having $100,000 in your bank account, sitting there not doing anything, and basically the bank gives you $3 to $6. So you have to get leveraging. Like that's, if you want to be successful in this market, leverage is going to be your best friend. And I could tell you that because there's been, in the beginning, blown accounts that I've done. There's been trades that I lost, and I don't keep nothing away. I'll tell you when I'm losing. I'll tell you when I'm winning. Now, in the past 7-8 months, it's been 400 plus ones and 4 losses, which is high. Basically, I'll pat myself on the back on that. But in the beginning stages, I didn't understand what leverage was. I just understand what money looked like, and I wanted to make it. So 200 to 400 pips negative that you can sustain. Worst case scenario. Everybody say worst case scenario. They talk about the what ifs. Well, what if? What if this trade does this, or what if the trade does that? Well, guess what? I'm Gucci. I'm 30, so y'all gotta, but I'm Gucci. I'm not sweating because I know I'm leveraged right. Worst case scenario, if you can sustain 200 to 400 pips, hear me out, write this out, record it, you name it, this is it right here. If you can sustain 200 to 400 pips, worst case scenario, you will always, 98% of the time, with your strategy. I'm not telling you go and gamble in the market. Don't go and guess and say any, many, miny, mo, and you pick buy or sell. But this right here is what's going to take you from not profiting to profiting and making money consistently. Leveraging. So when you hit me up and say, hey, what's going on with this trade? And the trade is like 40 pips in the negative, I'm not even worrying about the trade, but you sweating because you didn't over leverage trying to make some money. You can, like somebody said, you can go to sleep and not even have to worry about this, because if I just told you GJ moves 100 to 200 pips daily, and remember, what goes up has to come down. If it's continuing to go up, it has to build that support. So 200 to 400 pips daily, you'll be all right. So leverage is key. Worst case scenario, 200 to 400 pips. You will not sweat, because with this strategy I'm going to give you guys, is proven itself, not a couple weeks, basically 7 months. 7 months has proven itself. And a lot of you guys have followed me for 7 months. So this strategy here, all you have to do is be able to sustain 200 to 400 pips. And I want y'all to basically type in the chat, I will not over leverage. I know it's a lot of words, but I'll wait for you guys to type that in. Because if you basically telling yourself you will not over leverage, if you blow your account, you can go back to this recording and see where you type in here and say you will not over leverage, and then you have one person to blame. The person you look in the mirror and see. But if you type that in here, I will not over leverage. Don't worry about the big numbers. Yeah, I'm going to show you guys how to compound your money and not over leverage. That's going to come. But you have to understand, all money in this market is good, because it's money that you didn't have, and it's money that you're making from your darn cell phone or your computer. Most persons, like myself, we have to go to a job and put in hours to work to get a paycheck at the end of the week. That's the average person. But what happens is, us being humans, when we look and see that we're making all this money, or making easy money from your cell phone, from somebody telling you to buy or sell, you tend to take a chance, and that becomes gambling, and that's what you don't want to do. All right, I had to stay on that for a little bit. All right, so let's get into the business. Scalping on two ways: the impulse and the consolidation. Write down impulse or take a picture. Now, I tell you guys, 70 to 100 pips. This is what I do. But what I'm recommending you doing, if you're going to back test, or if you're going to practice this strategy before you master it, I would wait for you guys for more confirmation. Wait till it gets to about 100 pips. And once it gets there, you're going to basically enter on the correction. Now, here's the thing. Some people say, well, what is he doing? What is he doing? He's basically trading against the trend. Whoa, what is he doing? I'm looking for something small. Some traders, they look for that big impulse. They try to get the 70 to 100 pips, which is good. I have no hate. I'm not hating on that. But if I have a strategy and I know what I'm looking for in the market, I just told you guys in the beginning, my goal is 20 pips a day, minimum, right? So if I say my goal is 20 pips a day, minimum per day, this strategy here, I'm basically eating off of this. So I can compound and I can hit those goals. So don't let the pip count fool you at the end of the day. The lot size is where the money is at. I told somebody that this weekend. You can have somebody that called 200 trades in 1 week. But if their lot size, if they don't know how to compound that money and increase the lot size and leverage correct, then you'll be there all day trading. So 70 to 100 pips. 70 to 100 pips in an impulse. An impulse is going to be right as next to impulse. Straight buy candles or straight sell candles. Now, this market knows what we're trying to do, so it can try to fool you also. So here's the thing. If for some reason you see a little small candle in there that's not what you're looking for, it's all right. The market is open 24 hours a day, 5 days a week. Wait for it. Wait for it. So impulse, all straight buy candles or straight sell candles. If you have 3 buy candles and then you have a little sell candle in there and for 5 or 10 pips and then you got more buy candles, that's not my impulse I'm looking for. I'm looking on straight buy candles or straight sell candles. And once you get there, you can enter for the correction for only 10 pips. So right next to that on impulse, I'm only entering correction for 10 pips. Now here's the thing. If we're scalping, that means we're in and out of the market pretty fast. So if we wait for 100 pips to hit, right, on the impulse and we enter for 10 pips, and let's say it's playing around because candles go up and down. So if it comes down to 7 pips, and you put your stop loss in profit, and you made 7 pips, and then it goes back to the entry price, then you re-enter again. And you keep on riding that thing down until it crosses your 10 pip mark. So you can make 30, 40 pips on that one correction you're looking for by sticking with the same impulse strategy. So impulse is going to happen from a few things. It's going to be one, it's going to be news. 2, it's going to be either when the market opens up or when you have basically the Tokyo session open up or the London break session, depending on what pair you're using. I apologize. So if you're not trading GJ, I'm telling you guys what I look for. But if you're trading, another pair, you wait for their sessions to open up, and that's usually when you see the impulse, or you can look at news. And yes, I'm using the 15-minute time frame when I'm calling these. I look at every other time frame just for confirmation, but I use the 15-minute just because this is what I started with when I was with Dr. K, when I was in the trainings, all right? So 15-minute time frame is what I'm using when I call the trades, and I enter on the correction. So that's one way of scalping, the impulse. There's only 2 ways. The second way is the consolidation. Everybody write down any time of the day, any trade, any time of the day. If you can find out where a pair is consolidating, and you can find the lows and the highs, I saw some faces just lit up and started writing down. But if you could find that, it's game over. You can go in the market any time of the day, find any pair you want to go to, and you can basically scalp the consolidation. All right? So what do I look for when I'm scalping the consolidation? I'm looking for 10 to 15 pips. 10 to 15 pips from the high to the low. So let's just say consolidation, we said the lines is basically moving horizontal. So that means there is consolidation. So you have candles that's touching the high, and you have candles that's coming down and touching the low. In the middle of here is basically consolidation. So the market moves 3 ways. The market is moving up, the market is moving down, or is moving sideways. If the market is moving sideways, 9 times out of 10 it's consolidating. All right? And when you find the consolidation in the market, then you basically enter the direction of the trend. Reason I use 10 pips is that's what Dr. K started with, 10 pips and dip. That's what I basically did. Quick money, put your take profit, and you run with it. But here's the thing. In scalping, my goal is not hit and take profit. Write this down. The goal in scalping is not to hit your TP. It's good. It's great when you hit it. But the goal is to get your trade and put your stop loss in profit. Stop loss and profit is going to bring you from being, there you go, somebody said stop loss and profit. That's going to take you from worrying about a trade to basically having confidence in making money in this thing. If you can get the faster you can get your stop loss and profit, it's fair game. There's no way you can possibly lose once you get your stop loss and profit. There is no way you can lose once your stop loss and profit, because if the market hits your stop loss, it's going to take you out in profit. So my goal is not for the TP to hit. My goal is to get my stop loss and profit as quick as possible. That's why most of my trades, 70% of the trades I get into, basically hits in about 5-10 minutes. Now there are some that takes, a couple hours. The longest my trade has been is probably 2 days, worst case scenario. But stop loss and profit is where you want to be at. All right. So this is how we get the stop loss and profit. Once you trade, and here's the thing. If you're looking at the same trade, let's say I call a trade, all right, and you're looking at your MT4, and you see your trade just went up 5, 4, 5, 6 pips. Please don't wait on me to say put your stop loss and profit, because you have to understand every trade I call for you guys, I'm getting in that same trade as you. So think about it. I'm calling 100% of these trades from my cell phone. So I go in a trade, buy or sell, bam, in my phone. Then I go in the legacy trading group and I post that trade, buy or sell, and then I put, you take profit, right? Then I go back to my phone and I modify and put my take profit. So I look out for you guys first before I look out for my account, because I know I can sustain the pullbacks. So even when I'm doing put your stop loss and profit, you have to understand I'm typing that stuff in my phone. So if you see your trade is 5, 6 pips in profit, that's common sense. Just go ahead and modify it yourself, and then you'll be all right. Don't wait on me, because by the time I posted, it may already drop some pips, and you could have lost some money, or lost some of the profits. So here's the thing. If you can't modify your trades and put your stop loss and profit fast, and you see if I post stop loss and profit 4 pips or 5 pips, and you can't modify it fast, you may be doing something with the kids or at work or whatever the case may be, just go ahead and close your trade out and wait for another trade. Because remember, we said 4 pips. Before I call a stop loss and profit, I'm making sure it's at least 5 pips, 4 or 5 pips. And remember, it goes back to the goals. 5 trades. So if we do that 5 times in a day, that's our 20 pips total right there. So you may not hit the 10 pip TP, which is okay, but you made money. So you have to be grateful for just being able to make that money there. So if you can modify it that fast, just go ahead and close the trade out. All right. Does anybody have any questions before we go into trading view? Okay, ready for more. Look at y'all trying to pick my brain. Hello. All right. Let me share my screen. So now we're going to put these notes to work, right? So let's look at, so before we even get in there, if you guys want to just watch and see how to put the indicators on there, I use tradingview.com. You can sign up, it's free. And you can, this thing will save on all computers you're looking at. So I'll take this off here. So the indicators. You can go here and you type in your indicator, just the Ikimoku cloud. So that's the indicator I use there. What I'll do here is I'll share my settings so you guys can screenshot that. Hold on one second. Let me see if this is. Let me see. I want to make sure is because TradingView usually defaults it. So I want to make sure you guys have the right line. So it looks like the blue line. Okay, so it's opposite on this. So, okay, so go to settings, 1 second. We'll make the blue line, the red line, and bam, the blue line, and bam. So that's the settings, guys. Go ahead and take a screenshot of that, take a picture of it. All right, so this is the cloud. So I used the cloud, and then I used, as another indicator, the RSI. So go ahead and I'll use, that's my settings for the RSI. Take a picture of that, screenshot it, you name it, there it is. All right. So I'll go over the RSI really quick because that's it's one indicator that I use. And what it do, it measures the candle on the strength. So write this down, folks. On this RSI, if your RSI is over 70, so you guys see right here, this is where it's at here. It's measuring at 59 to the far right. But if it's over 70, which will be up here. So if this line came above here and it's over 70, that's going to be overbought. So if something is overbought, that means it's about to do what? It's about to go into a sell. If you have something that's overbought, it's going to go into a sell. If the RSI is under 30, that means it's oversold. So it's going to go into a buy. And this is just one indicator. So remember we talked about 3 or 4 indicators that we choose from, right? So if you just look at it, up here where it was overbought at 70, just take a look at it. We're going back. It was at 71.92. That's where it took this spike up, right? Took that spike up. It was overbought, and then what happened? Bam. It just dropped. And it dropped down to 37. So all that's money you could have been making. But that's basically an indicator. You come over here. Let's see if it was oversold down here. Right here where it was oversold. It was at 12. Man, if I see this thing at 12, I don't promote over leveraging, but I sure would have over leveraged on that one. But basically that drop, you just know that it's going to come up. But that's still just one indicator. We don't rely on just one indicator to call a trade, right? So that's one thing. Now, so the first thing I do when I come into this cloud or this chart, if it's not an impulse, I basically find the trend of the cloud. So the blue cloud is an uptrend. The red cloud is a downtrend. All right, we could go back. The blue cloud is an uptrend, basically mean all you see these buy candles. The red cloud is a downtrend, sell. You can go back and you can do this with any pair. Red cloud downtrend, blue cloud uptrend. And then you can change the time frames. The bigger time frames tell the bigger story. But I look at everything, but I stick to the 15-minute when I scalp. But I start off with the day, the 4 hour, the 1 hour, and then I work my way down to the 15-minute just to make sure I'm looking at everything. So the first thing I do is I look at the trend of the cloud. All right. So after I look at the trend of the cloud, remember we talked about these lines, the red line and the blue line. So this line here, this red line is basically the Dickinson. That's the signal line. That's the money line. The blue line is the Kinginson. So remember, you see the time sheet just changed. So this red line it was horizontal with the blue line, and then the red line kind of shot up like diagonal, like it was going to go up, right? So that would be one indicator here that, hey, this candle may just go up. And look at it, look at what it's doing. So we just everybody just keep an eye out on this candle for the next 14 minutes if we stay around there. But that would be one indicator. But then I would look at the trend of the cloud. Right now, the red cloud is a downtrend, but then you can tell the story in the future. This can be a fake out also. So this is why you don't stick to one indicator. So now if I look at the RSI, I'm looking at the RSI at 59. So it's pretty high. It's not at 70, so there's not much to be worried about. But I'm looking at this red line and this blue line after I check the trend of the cloud. All right, this is not the impulse. This is basically trying to find consolidation. All right, this is not the impulse. The impulse is going to be, I'll go over the impulse last, but the impulse is be straight buy candles or straight sell candles. All right, so you guys see where that line is kind of going up. So this candle here could possibly turn into a buy candle. If this turned into a buy candle, you see it's going up. This line tells the story, but you don't want to get fake out. So if we looked at it on this, this is not consolidation. I'm just trying to show you guys what to look at. We look at that new candle came out right here. So that new candle came out at 144.999. You guys see it's going up? I just want you to watch it. I'm not telling you nobody to go in no trade right now, so don't go jumping no buy. But technically, it went up about 3 pips from this new line came out. And that was on the timer. Right? So if we're scalping and we got in as a buy right there, I'm just showing you guys what to look at. This is not a trade. Then you could have caught 3 pips there. And see, it'll play around. The candle will come down, it'll go up. It'll come down, it'll go up. Okay? So always look at this line here. So the reason we're looking at these lines here is, 1, this is a signal line. It tells you the story. 2, we said that if the red line crosses above the blue line, then what? It's a buy. It's an indicator that it's going to be a buy. Now, they look like they cross about right here, if I'm not mistaken. Don't be calling no trades. I don't want nobody come looking for me. But right here is where it crossed. This red line here crossed the blue line. And you guys see, if we looked at it, let me put another line so you can see where it started. It started right here. And it's still going, right? So it started at 144.864. So we had put a 10 pip 964 right here. After that cross, we would have hit 10 pips TP. Okay? And the reason I would have said we would have had this strong indicator was on the cross. Basically, you could have looked at the buy cloud that's forming, which is still not a confirmation, but you also could come back and look and see, the highs and the lows also. So if I was looking, we wouldn't have consolidation in here because we had an impulse right here. We had an impulse right here. The impulse started at here, which was 64, and it came up to 10. So that came up about, 64, help me with the math, about 50-something pips. 50-something pips would not have been our impulse, which is 70 to 100. So I wouldn't have entered on the correction here. Okay? So, and then this wouldn't be consolidation because of this impulse. So the impulse here, this impulse here threw stuff off, so that's not good. This impulse here threw stuff off over here. So that's not good. So now we're not looking at consolidation. All right, we don't have no consolidation. We don't have no impulse because it didn't move, 70 to 100 pips. So I just want you guys to kind of see, different things what you look for and when you enter and when you don't enter a trade. All right, and this is probably because this was happening on Friday and then it just happened when the market opened up. So this is where the market opened up just now, where it had that impulse. All right, but it wasn't strong enough for us. All right, let's look at some impulse that could confirm my strategy. So let's see right here. Let's put this right here. Remember we said all buy candles or all sell candles, right? So let's see if this is one that confirms. This one here stopped here, right? Sorry for that. 1 second. All right. So this is where it started. We're looking for all sell or buy candles. And this is where it ended up, at this wick right here. All right, so started at 145.369 and came down to 144.522. So that is about 84 pips. All right. So let's just say we started it, we watched the impulse, came down. When it got to 80 pips, let's say 70 pips. So 70 pips would have been, somebody help me with the math, 36 and let's see, 36 would have been, it would have been like 144 point what? Somebody help me, my math ain't strong. Let's see, right here is 14, let's see, 660 would have been 40, would have been 76. So about 58 is probably where I would have entered. I think the chat is going. So 58 is probably where I would have entered the trade here at 70 pips. So 70 pips at 58. And then we say we're going to go ahead and go for 10 pips TP, right? So 10 pips TP would have been 68.3. So the yellow line is where we would have hit our take profit. Does everybody see that? Type in the chat if you see what just happened.
So I'm trying to make sure I understand this correctly. So you saw the impulse, which is all the red candles.
Mm-hmm.
And you said it moves 70 to 100 pips, and then you would get in as a buy for 10 pips?
Yeah, the correction. So the impulse right here was the sell. All
Right.
sell candles. So the correction is just the opposite of what it was doing. So once it hit 70, I basically would have entered as a buy and catch the 10 pips to correct itself.
Okay, thank you.
And so keep in mind, this impulse here took what? 15 minutes, 30 minutes, 45. It took about an hour to basically see it. Sometimes it happened way before, but this one basically took an hour for you to recognize it.
Okay.
But once it made it to 70 pips, if you're starting off new, 100 pips is what you look for. But if once you recognize it, 70 to 100, you enter here at 70 for 10 pips on the correction, bam, your TP was crushed. All right, let me find another one. And somebody posts, you can use a ruler. Yes, you can. I'm old school. I'm young, but I'm old school. All right, let's see. This here was 25. I came down to 81, so that's not my impulse I'm looking for. You guys here, look at this. So you see here, this impulse started here. And then it came down to here. I think we looked at this the other day. It came down here. So here's the thing. Don't get fooled with this buy candle in the middle. All right? And take it down and look for it here. It's straight sell candles. All right? So this one here started at 47, 145.477. And came down to 144.819. So technically that was only 67 pips. So technically it wasn't 70 pips on that one. So It just depends on what GJ was doing that day. I could have entered at 10 pips for the take profit on the correction. It would have hit, but to be on the safe side, basically you want to wait 70 to 100. All right, but the take profit would have hit there. You have questions in the chat? Let's see. Make sure your leverage is correct. There you go. Yes. Yes, leverage is key. All right, let's look for another impulse. Here's one. All right. It's a nice one here. So it started here, right? And it came all the way up here. Let's see. All right. So that's 144.30. So that is basically, that went up 100 and, is the math right? 70, 160 pips. Let me see something. Was it all one? Yeah, it was. It was all straight buy candles. So this is, we would have waited 70 to 100 pips. So let's just say it started at 144.70. So basically, 144.30. So we would have waited till it got to 145, right? 145. If we was doing the 70, which would have been here. If you was doing 100, then you would have been at pair 145.30. All right, but I'll just tell you guys, this is what I would have used. But if, like I say, starting off, you would have used 100. So 145.30 is where you would have entered here. All right. So if you did, this was a buy, 10 pips on the correction, you would have been at 41, which would be, 20. So your TP would have hit right here. If you had used the 70 pips and you came here, so there's 70 pips and you enter for the correction. So that's 145. So we're looking at 92 right here, right? Bam. That would have been my TP. Right? So that would have just following my strategy. Same thing we ran over in the notes. This is 70 pips here. All buy candles. And basically this would have been 15.30. You would have followed this for 45 minutes while checking the chart. You enter for the correction, which would be the sell, because you enter opposite. Now, this is when everybody's like, what just happened? So bam, your TP would have hit, and you would have been pissed off if you was over leveraged. So let's just say you was not over leveraged. You enter for the correction, which was a sell at 145.022, right? This trade went to 145.937. So you basically enter, you was about 91 pips in the negative, right? After you enter within 30 minutes. And you would have been panicking if you was not leverage correct, right? But then if you was leverage right and you was in paying it no mind, you was confident in what is about to happen in your strategy. Let's see, after another 15, 30, 45 minutes, you guys see that? Bam, your TP hit. It shot all the way back down. All right? So all my recommendations is just follow your strategy. Don't change it for nobody. Stick to it. Leverage right. And I guarantee you'll hit more profits. All right? Do we have any questions so far? Now, here's the thing. Everybody already commit to not over leveraging. But what I'm going to do is show you guys how we can make this your money, your trading accounts double. I don't care if it's $200. I don't care if it's $100. I don't care if it's $5,000. Whatever the dollar amount is, I can show you how to double this. This is the same spreadsheet that we were shooting for the million. So this spreadsheet here, which I'll post in the Telegram group, Mr. GJ Pip Walking, this is what I want you guys to look at. Day 8. All right, day 8. So write this down. You have a spreadsheet. Your goal is to get to day 8. You can get to day 8 in a day, in one day, or in a week. Day 8 is the goal for this spreadsheet. All right, now how do you do it? So in my goals, in the beginning of the PowerPoint, we said that we want to get 5 pips minimum. 5 trades minimum per day with a minimum of 4 pip total in each one, which is a total of 20 pips. Now I may call 2 trades, or you may call 2 trades and it hit 10 pips each. Or you may call a trade by yourself and it hit 20 pips. Once you hit 20 pips, and the reason I do it this way is because this spreadsheet can sustain 200 pips. If you want to get, you can even edit the spreadsheet where you can change it to sustain 400 pips. You can basically do that to be on the safe side. But 20 pips to complete one day. Write that down. 20 pips before you complete one day. Everybody asks me over and over, how do you do it? You take $500. I did this 2 weeks ago. And I'm not just spitting out stuff. My team group, my WhatsApp group, with everybody that's on the team, I show them the stuff as I'm going through this journey. 2 weeks ago, I took $500, turned it into $10,000. Last week, I took $700 and turned it into $8,400. This is stuff that's happening off of this same spreadsheet. But see, what happens is the average person can't follow it because they get greedy. It's up here. It's up here. You have to detach yourself from these trades and this money mentally. When you do that, so the person, everybody, we tell you to start off with a demo account, right? The demo account is not for you to just throw trades in. You practice the demo account the same way you're going to trade your live account. The same way you trade your demo account, you should be trading your live account. So everybody know the difference in the feeling. You go plug a trade in. I see people send me pictures of their demo account where their lot size is 20, 50, 100. That ain't impressing me. What impresses me is you trade that demo account just like it was your live account. I have a demo account that I started off with $5,000, and right now it's about $27,000 within a week. Every week I try to, change it up. But you have to trade it the same way you would trade your live account. That means when you do go live, there's nothing changing your trading style or your trading game. Does that make sense? So day 8, so you complete 20 pips before you go to the next day. So if you start off with $200, your lot size should be 10 cents. Then you hit 20 pips to go to 11 cents. You don't look at the, maybe $20 you made the first day, but you had $200. I just told you could have $100,000, and at the end of the month, your bank gives you $6. So if you can make $20 off of $200, in basically one day, that's real good. And you just compound it. As you complete the days, you compound it. When you get to day 8, no matter what your trading balance is, your account will double with this spreadsheet. Let me show you. I can change this to $2,000. And same thing, I start off with a dollar lot size, made $200 off my 20 pips. Go to the next day. Compound, compound, compound. At day 8, my account is double. Same thing. I can start out with $10,000. It doesn't matter how you started out. It gives you everything. You can edit this information. At day 8, I have $21,000. Simple math. Simple stuff. Don't matter how much pips you got. It's the lot size is making you this money. So you have to compound and compound and compound until you get there. So the thing is, you want to make sure you get into the market money first before you start to go crazy with compounding. So if you started off with $200 and you got to day 8, you basically double your money. You pull your money out and you trade with the market money, and you do the same thing over again, and then you compound that sucker. That's where your emotions is not going to be attached when you playing with the market money. Once you start playing with your money, oh, you stressed out. You looking at your phone like, what's going on? All right. Does anybody have any questions before we signed off? Yes, Peggy, this can work on any pair. Everybody is good?